Good evening. This is Doc Severson for the Theo Night Report for Thursday, May 3rd. I'm going to start out here with the S&P 500. We're looking at the ATR, or the average true range. And we can see that right now the S&P is still running at about a 38 point average range per day. Even today we had a high of 2636, a low of 2591, 45 points from tip to tail. Still big volatility that we're seeing in the market. Now, if we look back over at the full S&Ps, the ETF here of the S&P 500, a couple of things that I want to point out here. Now, the blue lines that you're seeing, the blue horizontal lines, are this week's expected move into tomorrow, into the big jobs report tomorrow, right? So that alone was the expected move as measured from last weekend. And the orange horizontal lines are the expected move as measured for next Friday. Notice that we're already blowing past next week's expected move. And this is kind of my point right now, is that right now, if you are an option seller, and this is what I used to do for years, I sold options. Sold out of the money options, out of the money options, out of the money options. They expired, they expired, they expired. If you're selling out of the money options with today's relatively low implied volatility, so even though we're seeing all this movement and all this ATR, then the options are not pricing in that forward movement. Again, that's what implied volatility is. It's the forward priced movement of the underlying. And it's just not doing it these days. So again, this is what we're seeing here, is that the expected move, which is that one standard deviation move from the price, is nowhere close to pricing in correctly and accurately a 1 week move, much less than a 2 week move here. So my point to you tonight is that right now is not a good time to be selling options out of the money. If the options market is not giving you an excessive premium, is not forward pricing in that much risk, and actually it's outrunning it. The price is actually outrunning that forward pricing of risk. This is an exceptionally poor time to be selling options right now. And I know that this doesn't make sense because we're in a corrective market right now. We're throwing off green candles. We're seeing strong selling coming into days like today. And we're just not seeing any reaction to it in the overall market. We're seeing certainly a lot of price movement for this, but if we look over here to the volatility futures or the VIX or whatever we want to look at, we're just not seeing that much movement. So today, even the volatility futures go down. So my point here today is that you got to look to be long gamma. You got to look to flip that equation in your favor and be using debit spreads. So whether or not you're using debit spreads either through an in-out spread, just a single in-out spread, and you're taking a directional bet, or you're saying, I don't know which way this is going to go. However, I believe the price will go beyond a one standard deviation movement. And this is certainly what we're seeing, especially when we have all of this energy built up. So this is our job always, is that we have to figure out where the edge is. And right now the edge is with the long gamma trader, not the short gamma options selling trader. Now tomorrow we have some interesting happenings. We have the jobs report tomorrow morning, as well as retail sales. So a lot going on tomorrow. And also really what's not reflected here is, I believe last time I counted, 7 different individual Fed speakers doing their thing tomorrow. Obviously trying to explain what they set up on Wednesday with their discussion of, well, our view on rates is symmetric, whatever that means. So they can all explain that one by one. So again, a lot of risk tomorrow. We are expecting about 191,000 jobs. The last one that was printed was 103, a big miss. So watch for that tomorrow. Again, look into long gamma. The price is outrunning the risk that the options market is placing in there. That is it for today's report. Thanks for listening. We'll see you tomorrow.